Okay, welcome back to our discussion on adjusting entries. And this video will be talking about prepayments. In the last video that we have made, we defined prepayments. And as a review, prepayments are considered as advance payments for operating expenses. In this video, we are going to show an example and the different steps also in order for us to create correct, accurate adjusting entry at the end of the accounting period. So we have four steps there. And on the board, on the slide, we have illustrated an example of a prepayment. That's on September 1, 2019. The company paid in advance a 2-year insurance expense. And prepaid insurance was debited. The prepaid insurance is what you can see on the trial balance at the end. And upon investigation, upon checking, this represents a 2-year insurance expense paid in advance. So what are the different things that you have to remember or to take down before you can create an adjusting entry? The first one, we have the principal amount or the amount of the prepayment. You have the term. So in this case here, it is a 2-year term. 24,000 is the amount for 2 years. We have to have also the date of the receipt or the date of the payment, that is September 1, 2019, and the ending period, which is December 31, 2019. So the first step is to analyze the original entry. So since prepaid insurance was debited, the original entry was debit prepaid insurance 24,000, credit cash 24,000. Okay. Number two. In number two, you have to, at the end of this will be done at the end of December 31, 2019. You have to analyze what is the unexpired portion and the expired portion. So 24,000 divided by 24 months, the company has 1,000 per month insurance expense. So you have already determined the monthly expense. So from September 1 to December 31, that is 4 months times 1,000. So the expired portion of the insurance is 4,000. So 24,000 minus 4,000 expired insurance or expired portion, the prepaid insurance balance at the end of December 31, 2019 is supposed to be only 20,000. So on number three step, you have to make a summary before analyzing in step four. So step three, the write down expired portion is 4,000, unexpired portion is 20,000. So let's go now to step number four. You have to be very careful in this step because in my experience, although my students can get step one, step two, step three, they're very happy about it. But when they are not very careful in step four, then you can create an incorrect adjusting entry. So look at analyze very well the account. That's prepaid insurance. It's a debit. So 24,000 on September 1, 2019. So in the T account, if you try to put their December 31, 2019 balance, you only have 20,000. Okay. So the problem is, how do you make 24,000 to 20,000? So there must be a credit entry crediting prepaid insurance 4,000. So you have now one side of the adjusting entry, which is prepaid insurance credit entry 4,000. So you think of a corresponding debit entry no other than insurance expense. So insurance expense is an expense account. Prepaid insurance is an asset account. So you are trying to set up what is the expense at the end of the year because you are using the asset method. When you say asset method, when the company pays the advance payment, it is treating it as an asset account. Okay? So you just go back to, if you cannot understand at this very point the explanation that I have given, you just go back to the at the very start and then analyze it very well. You can get that, I'm sure. Okay, so let's go now, or we will proceed to another example. This time, we treated the company treated the prepaid insurance or the insurance expense as expense. So the company uses the expense method on the next slide. Okay, so what about if the company uses the expense method? We will start now with our step one. So the first one is the step one is the original entry. So on September 1, 2019, instead of debiting prepaid insurance, the debit entry was insurance expense 24,000. So in this method, the company treated the advance payment as expense. But in step number two, at the end of the year, this is just the same with our asset method, that you're going to segregate the unexpired portion from the expired portion. So just the same, the prepaid or the unexpired portion is 20,000 and the expired portion is 4,000. So in our step 3, under the expense method, the expire amount is 4,000 and the unexpired amount is 20,000. So in our analysis, before doing our adjusting entry, we go back to our original entry. The company uses the expense method, so the insurance was debited to expense. But if you're going to analyze, looking at our step 2 and step 3, the expense method, which is 24,000, at the end of December 31, 2019, is supposed to be 4,000. So how are you going to make it from 24,000 to 4,000? You have to deduct, of course, 20,000. So how are you going to do the deduction? You are going to credit the expense method or the insurance expense 20,000, so that it will become 4,000 only at the end of December 31, 2019. So what is you got now the credit entry for our adjusting entry. You have there, our credit entry will be insurance expense 20,000, and then of course the corresponding debit entry now will be prepaid insurance 20,000. Okay, so it is just the other way around. So I hope that you're going to just try to go back and then you try to compare. I know this one will be a little bit confusing if you are a beginner in accounting, a beginner in adjusting entry. But if you have a very solid knowledge of journal entries, so it will not be very difficult for you. So my advice is, if you think you are still confused, you go back to your original entry, even for this topic only, and then you work for the adjusting entry. Do not be discouraged. So I hope that you're going to follow my channel, and we will have another video on unearned income. So for more videos in accounting and adjusting entries and all about accounting, kindly subscribe to this channel so that you will be notified of the forthcoming videos. So thank you so much and see you around.